also. Which is now we're here in number 9. The other transactions are not really a problem because telling you that commission includes 1,900 received for March, you just know that I need to remove this 1,900 only, nothing much. Even this one, rents for February 2014 has not yet been paid, which means you need to add it. Am I right?
Yeah.
So those are things that we should not be worried about. But those transactions that we highlighted, those are the transactions that we still going to work on more. Okay, so our income statement is like this at the moment. We did put some workings. We just need to combine and then get the total amounts up until the net profit after tax. But now, before we obviously we finalize our income statement, we need to work on this transaction number 9. Okay. So what they're saying here, they're saying provide for depreciation as follows. Remember, we have not yet calculated and recorded the depreciation. Yes. So now we need to do the calculation and then we record it in our books. So we're having on vehicles 20% per annum on cost. So this is how we're going to calculate our depreciation. 20% per annum on cost for what? For vehicles, right? And then they're telling us here that a vehicle was purchased for 72,000 on 1 November 2013 and was properly recorded. So we have this vehicle that was purchased for 72,000 rands on 1 November 2013 and was properly recorded. Okay, we're very important when they say it was properly recorded, because you need to make a decision whether it is included in the amount sitting in the trial balance or not. And then on equipment at 15% per annum on carrying value. So when they're saying on carrying value, what do they mean?
They mean the value after it has depreciated.
Sorry, please come again.
They mean the value after it has depreciated, like the current value after
Yes.
depreciation.
Exactly. On the value after depreciation, this is like, we have more than 2, but most likely we follow 2 methods of calculating depreciation. You know the 2 methods that we usually use?
Yeah.
Which one and which one?
The straight line method and the carrying value method.
Carrying value method, very good. What is another name for carrying value method?
On cost.
No, not really. On cost, that is a straight line. Yeah? When they're saying 20% on cost, in other words, they mean straight line method. Yeah? But when they say on carrying value, what is the other word for that?
Diminishing.
Very good. Diminishing balance method. Yeah? That's the second one. They also usually call it a reducing value. Sometimes they can say diminishing balance method, they can say reducing value, they can say on carrying value. So those are the things that you should be aware of. When they say on equipment at 15% per annum on reducing value, on diminishing balance method, on carrying value, they're trying to tell you that you need to take cost minus accumulated depreciation first, and you get your carrying value before you calculate your depreciation. Yeah? Okay, then they're saying no entries have been made for old equipment sold for 4,200 cash on 1 February 2014. So there is that one equipment that was not accounted for, because they're telling us that no entries have been made. So which means there were no journal entries, which means there were no records that were made for the equipment that was sold. So we sold an item of equipment, but we did not record it in our books. So we need to account for this first before we do everything else. Okay. The cost of the equipment was sold. The cost of the equipment sold was 25,000 rands, right? And the accumulated depreciation on the equipment sold was 21,000 rand on 1 March 2013. So this is a transaction that we have. We need to break it down first. Né? step by step. Yes, we need to break it down. So it's either we're going to start with vehicles or we start with equipment. So let's start with the first one. Let's start with vehicles. Yeah. Before, let me just go to the and check our vehicles on our trial balance. What we have here, if you look, for motor vehicles, we have 289,000 as what as the cost price. Can you see that?
Yeah.
And then we have accumulated depreciation of what? Of 93,000 when this is on 1 March 2013. So let's start calculating the depreciation for what? For motor vehicles first before we go to equipment. Are you okay with that?
Yeah.
Let me go back then. Let's go back to the transactions for equipment for motor vehicles. They're saying on 20% per annum on cost, a vehicle was purchased for 72,000 rands on 1 November 2013 and was properly recorded. So which means now for vehicles, they are divided into two. So we're going to calculate two depreciations for vehicles. So I'm going to have workings number 5 here, right? Just going to have workings number 5. And then what I will say, let me just say depreciation. And then I say motor vehicles. Okay, depreciation, motor vehicle. Let's start with this one. Because we can see here that we have motor vehicles that was purchased during the current financial year. And then we have the old one. So we're going to calculate two depreciation. Am I right?
Yeah.
Okay, so which one we're going to start with?
The old one.
Okay, we're going to start calculating the old one. Yeah? You know, I don't want us to start with that. Can we start with the new one first? Because if you look, there was a new that was purchased and it was properly recorded, which means we can start with the new one because from that cost that is sitting in the trial balance, we will have to subtract this one first. That's what we're going to do. So can we start with the new first? So I will just say new vehicle, right? I'll just say new vehicle and then I do this. So how are we going to calculate the depreciation for it? They said 20% per annum on cost. How much is the cost?
72,000.
72,000 rand. That is the cost price of motor vehicles. So which means now I'm going to say 72,000 rand multiplied by
20%.
Multiplied by 20%. And then are we going to apportion it or not?
We have to count the month it has been working for.
Sorry, come again.
We have to count the months that it has been working for.
Yes, how many months in this instance?
4 months.
It's going to be 4 months. Very good. From 1 November, right?
Yeah.
It is going to be 4 months. So which means now I'm going to say 72,000 rands. And then I say times, multiply by, they said 20%, nah? 20%. Okay. And then after that, I'm going to say multiply by, this is 72,000 times 20%. And then I need to say multiply by 4/12, multiply by 4/12. So how much am I going to get?
4,800.
4,800. Okay, so this is going to be a depreciation for the new vehicle that was purchased. Okay, so we sorted with this one, eh?
Yeah.
Okay, so we sorted with the new vehicle that was purchased. We know that we're 4,800. Let's go to the old vehicles now and see what is going to happen there. Okay, old vehicles. Let's go back. So what we're going to do now, let's go there and see. Old vehicles, 289,000 and then 93,000. So what are we going to break here?
We're going to 289,000.
289,000 then?
Times 20%.
289,000 times 20%. Why are you saying multiply by 20%?
Because you're counting the depreciation for
motor vehicles, right? But now I want you to notice something, Kinelo, ne? Because they're saying here, a vehicle was purchased for 72,000 on 1 November 2013 and was properly recorded. Ne? Can you see this? And was properly recorded, because this 72,000 is already included in this 289. The 289 sitting in there, the 289 that is sitting in the trial balance, it is already included here because it was properly recorded when it was purchased. Are you still with me?
Yeah.
So it means now we need to take it out from this 289,000 before we multiply it by 20%. Am I right?
Yeah.
Do you agree with me?
Yeah.
So which means now, what do I need to do? I need to say minus 72,000 first, because we've already calculated the depreciation for this 72,000 separately. So I need to take it out first before I say how much am I going to get now? How much am I going? 289,000 minus 72,000, because 72,000 is the new vehicle, and we've already calculated the depreciation for new vehicles. So we only need a depreciation for old vehicles now. So if we say 289,000 minus 72,000, how much you getting?
217,000.
217,000. So which means this is the cost price of the old motor vehicles. Am I right?
Yeah.
Then what we're going to do now?
Then we're going to times it by 20%.
Exactly. Multiply by 20%. Multiply by 20%. So how much are we getting now? We have to apportion this one.
Good.
Sorry, come again.
43,400.
43,400. So that is the depreciation. That is the depreciation. Do we have to apportion it?
What does that mean?
To apportion.
Yeah.
Like to I mean, like I'm trying to say, when we are portioning, right, like for example this one, you said 4/12, you are portioning it, which means now we only used it for a few months of the year, right? So that's what I mean, which means do we have to divide it by the number of months out of 12, or we don't have to do that?
We don't have to do that because it's gonna equal to 1.
Why we don't have to do that? Because it's gonna be equal to 1.
Yeah.
Yes, that's correct. But the main reason is that these assets, we have been with them for the whole year. So that's the reason why we don't have to apportion it, right? Because we have been having these vehicles for the whole year. This one we needed to apportion it because it's a new vehicle. It came during the year. These ones did not come during the year, but we have been with them the whole year. The old vehicles. That's the reason we don't have to apportion this one. We don't have to maybe divide times 11/12 or times 4/12 or times 6/2. We don't have to do that. Né?
Yeah.
So we sorted. Are you happy with the depreciation for motor vehicles? Né? So how much would be the total depreciation for motor vehicles? You're going to have 4,800, né? Plus 43,400. How much are we getting?
48,200.
48,200 now. Okay, so this is the total depreciation now. Okay, are you happy how we calculated it?
Yeah.
Okay, thank you on that. Now let's go to depreciation. What now for equipment? Let's go to depreciation for equipment. Let's go back to the transaction and see how we're going to do. Firstly, here we have equipment of how much. I'm just going to unhighlight these ones. We're done with them. Equipment, we have 160,000, which is the cost, and then accumulated depreciation on 1 March 2013. We're going to have how much? We're going to have 79,000 rands. Okay, now let's go to the transactions. Let's go to the transaction. The cost of the equipment. Oh, sorry. I'm just going to unhighlight these ones. We're done with these ones now. So here they're saying on equipment 15% per annum on carrying value. They're saying no entries have been made for the old equipment sold for 4,200 cash on 1 February 2014. So we have this equipment that was sold for 4,200 cash on 1 February 2014. Then they're telling us that the cost of the equipment sold was 25,000 rands and the accumulated depreciation on the equipment sold was 21,000 on 1 March 2013. So what is the starting point here?
You're going to work out the carrying value.
Okay, so the carrying value for equipment, right? Which one? The one that was sold or the old one? Because again, here we have to split it into two, right? So I'm going to have what? Sold equipment. I need to calculate the depreciation for the sold equipment first, and then I calculate depreciation for unsold equipment. Am I right?
Yeah.
Yes, I will calculate the depreciation for the sold equipment, and then I'll calculate depreciation for unsold equipment. Let's start with the sold one. The ones that remain with us, the old vehicles, old equipment or unsold equipment, let's do them at the end. But let's start with these ones that left us during the year or that came in during the year, because vehicles came in during the year. We started with that, the new vehicles. Then the sold equipment, this one left us during the year. Let's start with it now. Let's deal with it, and then after that we move on to the next one. Yeah?
Okay.
The sold equipment, the cost of that. Do you know asset disposal?
Yeah.
Yeah, there is an account called asset disposal. You always have to maybe do that T account whenever there is an asset that was disposed. It's very important that you do that. I'm going to do it with you so that you can see how we do it. It is going to save you a lot when you're doing these workings. Okay, but I will do it with you just now. Let's start calculating a depreciation of the equipment that was sold. Because another thing here, we will need to know whether we sold this at a profit or at a loss. That should go to the income statement. Right? Yes. So we're not just getting depreciation only here. We're also getting a profit or loss on disposal of the asset. Let's do the calculation. Depreciation for the sold equipment. How much is the cost? 25,000, right? Okay, so my starting point for the equipment sold, I'll say 25,000. And then what do I do after that?
Minus 21,000.
Minus 21,000, yes. Okay, 21,000, and then?
Times by 15%.
Multiply by 15%. Yes, okay. So I'll say times 15%. And then?
And then you have to count the months it was.
The number of months it stayed with us, right?
Yeah.
Yes, that's by doing that, you are portioning it, right? I want you to learn this term. You are portioning in the depreciation when you're doing that, right? You are portioning it for the months, for those months that we kept the assets with us. So which means now we need to calculate how many months did it stay with us, né? So when did we sell this one?
The 1st of Feb.
1st of February 2014. So how many months we're going to use?
1.
1/12. Why?
Because oh no, 11.
Yes, 11 months, because 1 month it's already, the asset is gone for 1 month. But how many months did it stay with us during the current financial year?
11 months.
Exactly. So we need to say 11 over 12 because February 2014, the asset was not with us. So I cannot calculate depreciation for the assets that were sold. How many months before we sold it? But the asset that we purchased, how many months after we purchased it up until the year end, right? So that's the difference between the two. So we're going to say multiply by 11 over 12, eh?
Yeah.
Okay, and then how much are we getting?
I got 550.
You're getting 550 rands, no?
Yeah.
So this is the depreciation for what? For the asset that was sold. This is the depreciation for the asset that was sold. Okay. On diminishing balance method, are you happy with this one?
Yeah.
Okay, thank you. Thank you on that. Now, let's calculate the depreciation for the unsold equipment. For the equipment that was unsold, what are we going to do?
We're going to go to the trial balance.
Yes.
And then we're going to say 160,000.
Yes, 160,000. That's our starting point, yeah?
Yeah.
And then?
We're going to subtract the accumulated depreciation.
Of how much?
79,000.
79,000, right?
Yes.
79,000, and then?
We're going to multiply it by 15%.
Multiplied by 15%. Okay. Multiplied by 15%. Why? Okay. Times 15, and then?
And then you don't apportion it because it's been with us the whole year. And then you'll get your answer of 12,150.
160,000 minus 79,000 times 15%. You're getting how much?
12,150.
150. Okay. So this is your depreciation for the equipment that was unsold, né?
Yeah.
Okay. I want you to notice something, Kinelo, because you didn't consider something in calculating your depreciation. Remember, here we have the equipment that was sold, and no entries have been made for old equipment sold for 4,200, the cost, which means now in this cost price of 160, there's 25,000 of that equipment that was sold. We did not deduct it, which means now we're double counting the depreciation because we've already calculated depreciation for the equipment sold, which means now on this cost that is sitting here on this 160, there is cost of the equipment that was sold. Are we not supposed to remove it?
We're supposed to remove it.
Exactly. Again, on this 79,000, which is accumulated depreciation, there is accumulated depreciation of the equipment that was sold. Are we not supposed to remove it?
We're supposed to remove it.
Exactly. That's our starting point. Let's remove the old equipment from the cost and also from the accumulated depreciation. And we know that we left with the equipment that were not sold. Only the one that was sold is dealt with separately, and we've already dealt with it and we're done with it because there is the calculation here for the sold equipment. But when it comes to the unsold equipment, I'm going to delete our calculation now. I want us to deal with the cost first. So what I'm going to do, I'm going to say how much is the cost? How much was the cost on the trial balance? 160, right?
Yeah.
The cost on the trial balance is how much? Is 160,000. Let's confirm it. There is 160,000. But we know very well that from this cost, there is the cost price of the equipment sold, and that was not recorded. By saying no entries have been made, which means this equipment was not removed from our books. So our starting point, we have to remove it. The cost of the equipment sold was 25,000. So we need to remove this 25,000 first from where? From that 160. So I'll say minus 25,000 rands. How much is the cost after removing? After removing the old?
135,000.
So it's going to be 160 minus 25,000, right?
Mhm.
135,000. So which means now this is the cost of the equipment after removing what? After removing
Yes.
the sold one, right?
Yeah.
Now let's get the accumulated depreciation after removing also. After removing the accumulated of the asset sold, because now we know they gave us the cost of the equipment sold was 25,000 and the accumulated depreciation on the equipment sold was 21,000 on 1 March 2013, and that's exactly the one we need. So which means now I'll go to the one on the trial balance. How much is it? 79, yeah? So I'm taking this 79,000 and then how much am I going to subtract?
The 550.
Not really the 550. This is depreciation, but I need to subtract the accumulated depreciation of the asset that was sold. How much is the accumulated? They told us here that the accumulated depreciation on the equipment sold was 21, yeah? So this is the one I'm subtracting, am I right? You know the reason why we don't have to include 550, because we're having a depreciation at the beginning there. The depreciation that the accumulated depreciation that we have there is on 1 March 2013. So which means now we're also going to subtract the one on 1 March 2013. The current year's depreciation for the equipment sold, we don't have to include it. So which means now I'm going to say minus 21,000 here, right? Minus 21,000, and then how much am I going to get as the accumulated depreciation after removing the other one that was sold? How much are we getting?
$58,000.
58,000, right? Okay, so we're getting 58,000 rands. Okay, so now we have the cost after removing the asset sold. We have the accumulated depreciation after removing the asset sold. Can we not calculate depreciation now?
Yeah, now you can calculate it.
Exactly. Now I can say, so how am I going to calculate it here? What must I do now?
135,000.
Exactly. Yes.
50,000
Minus 58, yeah?
times by 15%.
Multiply by 15%. Very good. Do I apportion this one?
No, because we had it for the whole year.
Exactly. Very good. And then how much are we getting?
11,550.
11,550 rands. 11,550 rands. So that is the depreciation for what? For equipment, right? So how much depreciation for equipment? Total depreciation for the equipment is going to be how much?
12,100.
12,100, because we're taking 11,550 plus 550, yeah? Exactly. So it's 11,550 plus 11,550 plus 510, 550, yes. And then we're getting 12,100. Are you happy with this one?
Yeah.
You saw where you made your mistake, now.
Mm.
Yes, all the time, we'll have to check whether any entries have been made or not. If there were no entries that have been made, you must keep that in your mind. Say, okay, which means this one was not removed. We sold this asset, but since there are no entries that were made, which means it was not removed from the cost that is sitting on the trial balance, it was not removed from the accumulated depreciation that is sitting on the trial balance. I need to start removing that first before I calculate depreciation for the unsold. So that is the depreciation, the total. So what do I need to do now? I need to go to my income statement and do it and say depreciation. I will start with the one for equipment, which is going to be 48,200 plus depreciation for motor vehicles. Sorry, depreciation for motor vehicles. The total is 48,200 plus depreciation for equipment. How much is that? 12,000, yes.
100.
12,100, yes. And then I will get the total depreciation here. How much will that be? How much are we getting?
300.
60,300, yes. So this is the total depreciation that we got for what? For motor vehicles. Okay. And then we go to the directors declare the final dividend of 40 cents per share. Does this affect income statement?
No.
It does not. Okay. Income tax of 61,500 for the financial year ended 28 February 2014 must be brought into account. So that is income tax, right? So where does this one go?
Income statement.
Yes, so this is the income tax, right? For the current financial year, we need to go and have how much? 61,500 here. So I need to say minus 61,500 there, right? That is going to be my tax. Then now we've considered all our transactions and nothing else is going to affect my income statement. Now I can close off all these amounts that are here and put them in the total column and complete my income statement. But before we do that, I want us to work on this, please. I want us to work on this fixed asset note. You know, the reason why I want us to do that is because the reason I want us to do this is because we just did the calculation for fixed assets, depreciations, and all of that. I want us to complete this while we're still fresh in this calculation, because these things they having a relationship now. And I just take this and then put it here next to this. I want to put it here. I'm just gonna put this here, and then we complete this fixed asset note, right? We complete this fixed asset note. Okay. What are we going to start with? Starting with the land, yeah?
Yeah.
Let's start with the land and buildings. This is what land and buildings. Do we calculate depreciation on the land and buildings? There was no transaction that spoke about land and buildings, yeah?
Yeah.
Okay, so how much we have is the cost. And in buildings, we have 965,870. Can you see this?
Yeah.
Okay, so where does this go in our notes?
It goes to the carrying value at the beginning.
Carrying value at the beginning, yes, but it will start as the cost, right? It will start as a cost, 965,870. I'm going to have 965,870 as what? As my cost price. And then how much is my accumulated depreciation? It's going to be 0 because we're saying land and buildings do not depreciate now. Then my carrying value is my cost minus accumulated depreciation, which is going to be the same 965,870. Why are we saying land and buildings do not depreciate?
Because of the historical cost.
Principle, ne?
Yeah.
Yeah, you are right on that. But historical cost, so which means now, why vehicles and equipment depreciate, which means historical cost does not apply to vehicles and equipment because we depreciate them.
Mm.
You're saying to me, land and buildings do not depreciate because of the historical cost, ne?
Yeah.
So then why are we depreciating equipment, vehicles and equipment? Historical cost does not apply here. What does historical cost say?
That we must record our assets.
That's original cost, ne?
Yeah.
Yes, you're 100% correct on that. Very good. You know what, Kinelo, I want to tell you something. Historical cost apply to all the fixed assets. Yeah? It applies to all the fixed asset. It has nothing to do whether you deal with depreciation, whether you depreciate the asset or not. Historical cost, it has nothing to do with that. Yeah? It doesn't say you must depreciate vehicles and equipment and you must not depreciate land and buildings. I want to tell you a secret. Most students, they don't know this because what we know at a grade 12 level, I understand. Ne? Yes, you will not know. But when you go to university and you further your studies, you will know that land does not depreciate, but buildings, they do depreciate.
Mm.
You get what I'm saying? The reason why we're not depreciating this land and buildings is because in this land and buildings, there's both of them here combined. There's land, there's buildings, and we don't know how much is for buildings. We don't know how much is for land. But what
Yeah.
we know is that land does not depreciate, it appreciates. The land, I'm only talking about the ground, right? The ground that has nothing on it. Then the buildings, anything that is built on that land, buildings, they do depreciate. Just like there at your home, there is land, there's buildings there. Am I right?
Mm.
So the buildings, the house that you're sitting on now, it does depreciate, that one. But
Okay.
the land where the house is built on, it does not depreciate. So this cost, it includes both. The reason I'm not going to depreciate at all is because I don't know how much is for land, how much is for buildings. So let me rather not depreciate them at all. But when you go to university, these things will be split.
Mm.
There will be a column for land, there will be a column for buildings. Then the land will not depreciate, but the buildings will depreciate. They will tell you the depreciation rate for buildings, and you will have to calculate depreciation for that. So now you know the reason why we're not depreciating these ones, nah?
Yeah.
It's because of what?
It's because land doesn't depreciate and building depreciates, and you don't know how much the building is depreciating.
Exactly. We don't know how much is the value of the buildings here. We don't know how much is the value of the land. Had they gave us like these two amounts separately, we were going to know, okay, fine. And this is for land. Land does not depreciate. We know that, but the building does. And then I was going to calculate depreciation for buildings. Because I don't know that, I'll keep it as not depreciating. That is the only reason. Additions at cost. Did we buy any buildings?
No.
Did we? Nothing, huh? Let's dispose allocating value. Did we dispose any?
No.
No. Depreciation?
0.
Saying 0 also, yes. And then the cost at the end. How do you calculate the cost at the end? The cost at the end is going to be the cost of the building at the beginning plus additions at cost, right? Minus cost of the assets that was disposed. I want you to give you this. Did you know about that? Did you know about that?
I just thought you just did the cost and did the additions.
What about the cost? The cost at the beginning plus additions only, ne?
Yeah.
That's what you knew. Is equal to this at the beginning plus additions, ne?
Mm.
And then you get this. You see there is a secret here. Disposal at carrying value. The cost of the asset disposed, you must remove it from this amount. So cost at the end, I want to give you the formula, is equal to how you calculate the cost at the end. It's called cost at the beginning, right?
Mm-hmm.
Plus
Additions.
additions at cost, right? Which means you take the cost of the asset that was purchased, and then what else after that?
You subtract the
Cost.
addition.
Yes.
You subtract disposal at carrying value.
Yes, but only the cost price. This one is a carrying value that we record here. I need the cost of the asset disposed. And it means that we're calculating what we're doing here. We're calculating the cost at the end, which is this 965. Cost is equal to cost at the beginning plus additions at cost minus cost of the assets disposed. Right? This formula applies to all of these: land and buildings, vehicles, equipment. You will see now, because under equipment we dealt with an equipment that was sold. I'm going to use this to calculate cost at the end. I'm going to use this formula. Are you following?
Yeah.
Okay. So in this scenario, the cost at the end will remain 96587 because there was nothing else, of which the accumulated depreciation at the end. How do you calculate that?
It'll for land and building it'll always be 0.
It will always be 0, yes, because there's no depreciation, that there's nothing. But what if you get 2 vehicles and equipment? How you calculate that? You must know things that should be considered when you're calculating accumulated depreciation at the end. Am I right?
Yeah.
Same, you must follow this formula. Accumulated, they've never told you about this formula before.
No.
Okay, now you're learning. The reason why you joined my classes is so that you know the things that you didn't know. Whatever that you have been getting wrong, now we're going to correct that in the exam. That's why you need to move from 43% to, that's why we need to move from 43% to 90%. Nah? That's our targets, right? Yes. Okay, let me give you this. Accumulated depreciation at the end, which means I'm calculating this amount. I'm calculating this amount that is highlighted in yellow, right? I'm calculating this amount that is highlighted in yellow. You will see these formulas. They are very useful. They are very useful when you're doing fixed asset notes. If you don't understand these formulas, your fixed asset notes, you will always be wrong. That's non-negotiable. It's something that will always be wrong if you cannot follow these formulas. Accumulated at the end, how you calculate it is equal to accumulated at the beginning, right? Accumulated depreciation at the beginning. Okay? Plus. Okay, let me just say minus first, because our starting point is this. Accumulated depreciation at the end. I'm going to start by taking this. Accumulated depreciation at the beginning, right? Minus accumulated depreciation of the assets disposed. So I will say here minus accumulated depreciation of asset disposed, ne? Okay, which is gonna be here. Not the amount that you will see there, not the amount that will be here. This is going to be a carrying value, but accumulated depreciation of that amount. So And then after that, you're going to say plus depreciation. Plus depreciation, which is going to be this one now. You see, the things, these three amounts will give you this, which is the accumulated depreciation. So now, for land and buildings, it will still be zero. It will still be zero, this one. And then carrying value at the end is going to be this one minus this, which is going to be zero. Are you following?
Yes.
Carrying value at the end, there is another formula that you need to understand. Carrying value at the end. These three formulas, I don't want you to forget them again, please, ne? These three formulas, I don't want you to forget them again. They will help you for the rest of your life, ne? As long as you're doing accounting, these formulas must always be in your head. Okay, let me just unhighlight everything. Let me just unhighlight everything. This amount, carrying value at the end. Can you see that one?
Yeah.
Carrying value at the end is equal to carrying value at the beginning. I'm taking this. I'm sure you must know about this. Carrying value at the beginning plus additions at cost minus disposal at carrying value minus depreciation gives you the carrying value at the end. Did you know about that?
I thought it was cost minus accumulated depreciation.
Yes, that one is correct. But the cost at the end, carrying value at the end is equal to cost at the end minus accumulated depreciation. It gives you the carrying value at the end. But there is this formula also. It has to, you still have to get the same amount, even if you say carrying value at the beginning plus additions minus this, you still have to get the same. You remember on your cash flow statement, if I'm taking operating activities plus investing activities plus financing activities, I must get the net change in cash and cash equivalents, ne? Again, that net change in cash and cash equivalent, I can also get it by saying cash at the beginning plus or minus cash at the end. I can still get the net change. So this amount, I can work it from here to here, or I can work it from here to here. I can still get the same 965,870. Can you see that?
Yeah.
But this carrying value, because you'll find out that in the exam, they will give you a fixed asset note that will have A, that will have B here, that will have C here, that will have D, H, E, and H with amounts that you need to fill in. Have you seen that before? Then you need these formulas to do that. Without these formulas, it will kick you out. It will kick you out. You will not get those amounts. That's the reason why I'm showing you these formulas, because carrying value at the end, you can get it by saying carrying value at the beginning plus additions at cost, right? Plus additions at cost minus disposal at carrying value minus depreciation. Yeah. These three formulas, I beg you, nail with that. Please don't forget them now.
Okay.
Please don't forget these three formulas. Now we are going to use them also here. They also going to help us. We have done these calculations, yes, I agree, but they are not enough because we're still going to need these formulas also. Sometimes they help you to prove yourself. If I did things right, you can also test yourself by using this formula to say, is this carrying value correct? I can test it using this formula. I can test it using this. I can test it using this. Né? Let's do it now and see. Now let us work on it and see if we can complete this note. Okay, for land and buildings, we're done with it. For land and buildings, we're done with it. So I just want us to go to the next ones now. Vehicles. Let's deal with vehicles. Let us deal with vehicles. Number one, I will go to my, let me just remove this. I'll go to my trial balance. My trial balance, what I can see, these are motor vehicles, right? This is the cost. And this is accumulated depreciation on 1 March 2013. Can you see that the accumulated depreciation, they gave us the date to say, this is accumulated depreciation on 1 March 2013, which means this is, we're sure that it's accumulated depreciation at the beginning of the year. Am I right on that?
Yeah.
So I will have to take it and put it where? And put it here as accumulated depreciation at the beginning. How much is it? 93,000 rands for motor vehicles. So I'll come here and put minus 93,000 rands here. Can you see this?
Mm.
But how much is the cost at the beginning of the year? How much is the cost at the beginning of the year? Now we need to go down to our, we need to go down to our transaction, which they said here, on vehicles 20% per annum on cost. A vehicle was purchased for 72,000 on 1 November 2013 and was properly recorded. This 72,000 is a cost that is included. It is included in this cost, right? We said it is included in this 289, which means this is no longer a cost at the beginning. It is now a cost at the end. Do you agree?
Yeah.
This is no longer a cost at the beginning. It is now a cost at
the end.
At the end, because included in this amount is the vehicle that was purchased during the year. 289,000, I need to take it and put it where? As the cost at the end. 289,000. You see how I do my note.
Mm.
So which means how much was the cost at the beginning? Because included here is 72,000 for what? Included in that 289 is 72,000 for the vehicle that was purchased. 72,000 for the vehicle that was purchased. So where does that 72,000 go? Where is it supposed to go?
It's supposed to go to additions.
It's supposed to go to additions. Very good. So which means now my additions are going to have how much? 72,000. 72,000. So how much is my cost at the beginning then?
Your cost at the beginning is
How much?
289,000 minus 72,000.
Exactly. 289,000 minus 72. And then how much are we getting as the cost at the beginning?
217,000.
217,000. You see? Let's say now in a test, they didn't give you this. They told you that you have A here, which is something they can do, right?
Mm.
They gave you have A here. Now you need to come to your formulas and see which one can I use to help me get that A. This is the one. This is exactly the one. Cost at the end is equal to cost at the beginning plus additions at cost minus cost of the asset disposed.
Mm-hmm.
So which means now, which one you need here? The first one, the A is going to be the cost at the, that is the one you need, right? Cost at the end, do you have cost at the end? 289. 289, you're going to say now 289,000, right? You're going to say 289,000 because you're starting with cost at the end is equal to cost at the beginning. That is going to be your X. Am I right?
Mm-hmm.
289,000 is equal to X plus additions at cost 72,000 minus cost of the asset disposed. We don't have that one, so I'm not even going to subtract it because we did not dispose any asset. Am I right? So which means now you is equal to x plus, is equal to x plus 72 here. So you solve for x, you solve for x, you get your A. So you said our A is going to be how much?
217,000.
You're saying it's going to be 217,000 rands. Yes, 217,000 rands. Okay. I was just showing. You can see how helpful the formula is. Then now, which means now you know how much is the carrying value at the beginning. 217 minus 93, how much are we getting?
124,000.
124,000, because we're taking the difference between the two. We're getting 124,000, right? Let's dispose of carrying value. Did we dispose anything for vehicle?
No.
So we're going to have 0 here, right? Depreciation, how much is the depreciation for vehicles? We did calculate it, no?
12,100. Yeah.
We got how much?
12,000. Wait. That's equipment.
That's equipment, yes.
We got 48,200.
Exactly, 48,200. I need to show it as negative here. Am I right?
Yeah.
48,200. That's the depreciation for vehicles. Then now, how much will be my accumulated depreciation at the end?
Accumulated at beginning, and then minus asset disposed plus depreciation.
Exactly. So we don't have asset disposed, right? So which means we're going to take these two. Am I right? So I'm going to have what? 93 plus 48, ne? It's going to be these two. Going to be these two. It's going to be these two. And then how much are we getting? If you add the two, 93,000 plus 48,200, we're getting 141,200. Am I right?
Yeah.
Very good. And then now, how much is my carrying value? You see now, this carrying value, you can get it in two formulas, because you did say it at the first. You said cost minus accumulated depreciation should give you this carrying value. But if you want to check yourself that I did things right, you can also use this formula. There is another formula here that you can also use to test yourself if I did things right. So you're going to get this amount using both formulas. Start with the one you want. Which one do you want to start with?
The formula.
Okay, how much you getting if you're using the formula?
I got 147,800.
147,800, ne?
Yeah.
If you're using the formula, 147,000. Okay, if you
Are you still there? Hello? Hello?
I'm sorry, I lost you. I think my internet connection was disturbed here. My internet. I'm sorry about that. where did you last hear me? I said if you use the other method, how much you get. Firstly, you told me that 147,800, right? If you use this formula. Then I said if you're using the other one, how much you getting?
147,800.
You still get 147,800, yeah?
Yeah.
You can see now you have different methods of dealing with the problem, yeah?
Yeah.
Yes, you must be like that. When you're facing a problem, you must have different ways, right? Of avoiding the problem, of solving the problem. So now you know that how am I going to get this 147,800? It's either I go from this side or I can take it from the bottom. Then I'm happy with it. Okay. So you're happy on how we dealt with vehicles, né?
Yeah.
Can we go to equipment now?
Mm-hmm.
Okay, so for equipment, we go back to the trial balance. We go back to the trial balance. For equipment, what do we have here? We have equipment cost of 160,000 and we have accumulated depreciation on equipment on 1 March 2013. So which means now we show that this 79 is the accumulated depreciation at the beginning. Do you agree with me?
Yes.
So which means now I can take that 79,000 and put it as what? Accumulated depreciation at the beginning. I'm going to have minus 79,000 here. Then now what about this cost? Let's go back. What about this cost of 160,000?
It includes the sold asset.
It
So
includes the sold assets, né?
yeah.
So which means since it includes the sold one, what does that mean? Is it the one at the beginning or at the end?
Beginning.
It is at the beginning, né?
Yes.
So which means now I am sure that this amount of 160,000 is the cost at the beginning also. So I can say 160,000 here. Am I right?
Mm.
So it means now I can get my carrying value at the beginning. How much will it be?
81,000.
It's going to be 81,000, right? Because we're taking the 160, then we minus the 79,000. I'm getting 81,000, yeah?
Mm.
Then now, additions at cost. Did we buy any equipment?
No.
We did not. Instead, we sold, né?
Mm.
Instead, we sold. So which means our additions at cost will be 0. Okay. Less disposal at carrying value. This one is very important. When I say at carrying value, what do I mean? I mean the carrying value of the asset disposed. You get what I'm trying to say?
Yeah.
Here I want the carrying value of the asset that was disposed. So now we need to know how much was the cost. How much was the cost? And how much was the accumulated depreciation for the equipment that was disposed? Let's go and check because we need the carrying value here, right? When it says less disposal at carrying value, I don't need the cost of the asset disposed. I don't need the accumulated depreciation of the asset disposed. I need the carrying value of the asset disposed.
Mm.
You get what I'm trying to say, ne?
Yeah.
Okay. Let's go and check. How much was the cost of the asset disposed? How much was the cost?
250,000 minus
250,000.
your 25,000.
25,000, right, was the cost of the assets that was disposed, ne?
Yeah.
Okay, 25,000 rands. How much was the accumulated depreciation?
21,000 plus 550.
21,000 plus 550. The 21,000 is going to be this accumulated at the beginning, right? Very good, very good. 21,000 plus this 550, right? 21,000 plus this 550. So in total, we're going to have what? Minus 21,550. So how much now is going to be the carrying value?
3,450.
3,450. We're just getting like the difference between the two amounts. That is 3,450. That is the carrying value of what? Of the asset disposed. So that's the amount I want to see here. You see what I want, yeah?
Yeah.
I want the carrying value, not the cost, not the accumulated depreciation, but I want the carrying value. Less depreciation. How much is the total depreciation of the equipment?
12,100.
12,100 exactly. We did calculate it now. 12,100. Okay. So now can I get the cost at the end? Can I get the cost at the end?
Yeah.
How much can you give me as the cost at the end?
77,550.
77,550. How did you calculate it? Oh, sorry. 77,550. How did you calculate this one?
I took the asset. Am I supposed to subtract it by the cost of the asset? Wait. I was doing something else. Let me try again.
Okay.
$135,000.
135,000. How did you calculate that amount?
I took the cost minus the cost of the equipment sold.
Exactly. You're going to get it without the formula. You see how the formula is helpful there? But also because here we know very well that because we said here, where's that? We said no entries have been made. So which means you knew very well that this 25,000 was not removed from that one. So you could have just subtracted it and then you get the cost at the end, which is not that difficult at this stage, but there will be those times where you will have to. So if you say 160, which is the cost at the beginning, because you see this formula, cost at the end is called cost at the beginning, which is 160 plus additions. We don't have additions, minus cost of the asset disposed, which is 25,000. Then you're getting your 135,000. Accumulated depreciation at the end, how do you get that one? How much can you give me?
When it says accumulated depreciation of asset exposed, that is disposed, does it include the 21,000?
Sorry, please come again. Please come again.
By the formula, it says accumulated depreciation of asset disposed. Are you going to include the 21,000?
Yes, 550. No, we're subtracting it. We don't add it, né?
Okay, so the accumulated depreciation of the asset disposed must be 550.
No, that is depreciation only. The accumulated, the total is here, 21,550.
Oh, okay.
Yes.
$69,500.
69,500. How did you get that one?
Accumulated depreciation at the beginning, subtract depreciation of asset disposed plus depreciation.
Accumulated depreciation at the beginning minus accumulated depreciation at the beginning minus accumulated depreciation of the asset disposed, né? And then what you said after that?
Plus depreciation.
Plus depreciation, which is 12,100, né?
Yeah.
How much you getting in total?
69,550.
89,550, right?
I got 69,000.
69,550. Yes, 69,550. Okay. So how much will be our carrying value? How much will be our carrying value? How much will be our carrying value?
65,450.
65,450. How did you get that?
I used cost minus accumulated depreciation.
Okay, you got 65,450, right?
Yeah.
Okay, can you use the other method? Can you use the other method as well to see if you're getting that amount?
Mm. $65,450.
If you're using the other method, now which amount you included? How did you get that one?
Carrying value at the beginning.
Yes, 81,000.
Plus additions at cost.
Yes, which is 0.
Minus carrying value of asset disposed.
Exactly, less disposal carrying value 3,450. Yes.
And minus depreciation.
12,100, and you get 65,000. You see your numbers, they add up, né? They make sense. You see, this thing just tell you that it does make sense, which means you can be able to check yourself if you made a mistake or if you got it right. You see how helpful the other formulas to know, né?
Yeah.
Okay. Now you get your totals. So for you to get the totals, very easy. Just I'm going to add all the carrying values, because now you're sure that everything I got it right. You're just adding your totals, and then I get my totals like this. I'm getting my totals like this, and then you come here again. You get your totals again. Here it's going to be 72,000, and then you get all these totals. And then again at the end as well, you're getting the totals again this side, which is going to be like, these are all your totals that you're going to get. Okay. Then you sort it. Then you sort it. Can you see how easy the fixed asset note, how easy to do when you understand these other formulas?
Yeah.
Yes. I think I don't want to give you too much, Kinelwe. Are you not tired now? You still okay?
Yeah.
Okay, but I don't want to give you too much. We're done with the income statement. I just wanted us to do this while we were after we did this calculation. The only thing now we need to do is to combine our income statement. Combine our income statement and then we're getting the totals. I will give this exercise to you. Né? There's nothing else that you're going to change here. You know what you're going to do. We close our bracket. We close our bracket, we get the total sales. We close our bracket here. We get what's the cost of sales. We get the gross profit after that. Discount received, there's nothing. So 4,120 should come here. Bad debts recovered, 4,300 must come here in the total. And then this side, commission income will close, we get the total, we put it this side. Expenses, 185,800 must come here. 185,800 must come here. Rent expense, we close it to get the total. Insurance, we close it to get the total. Water and electricity, 6,300 must come here. And then after that, telephone, 10,800 must come here. Director's fees, 450,000 must come here. Audit fees, 50,000 must come here. Okay. This one, bad debt, we close the bracket, we get the total, which is going to be 78,900. Yeah, 900. Okay. And then this side, 17,800 expenses, they must come here as it is. What else we need here? Nothing more. And then you also get the other ones. And then after that, again and again, we move these ones. We'll go up until the profit now. There's nothing much that I can say we still have to do. I will share the spreadsheet with you. Né? I will share the spreadsheet with you. And then after that, we're going to do another income statement together. Before we